Hey everyone, so today is December 10th, 2020. We're going to go over the biggest gainers and losers of the day. So let's pull up Market Watch. The market just closed 10 minutes ago. Biggest gainer was Occidental Petroleum. Now these are hard ones. They're energy stocks are harder to determine to run through the 8 pillars only because the way it's easy to do the 8 pillars, but their revenues and profits tend to be a little bit more inconsistent than other companies. And the biggest loser today was Lumen Technologies. So let's take a look at them from an 8 pillars analysis. So let's pull up Y charts. And remember, we will have the Everything Money app and website that'll allow you to be able to look at the financials the same way I do. So first off, $20 billion company. That's the market cap. Again, that's the number of shares outstanding multiplied by the stock price. That's what I care about in terms of determining the price of the company, not the stock price. PE ratio is negative, so they make no money right now. In the last 12 months, they've lost $15 billion, and their profit margin is negative 87%. So X on PE, X on profit margin. Their dividend has been cut big time. This is not off to a good start. Their financial statement. This is their, we're going to go to their yearly revenue. 12.5, 10, 12.5, 17.8, 20.3. So 20.4. There's a check mark there, but as you can tell, over the last 10 years, the revenue has been very inconsistent. Profit over the last 5 years, they lost 7.8, lost 570, made 1.3, made 4.1, lost 700 million. All over the place again. And I think this year has been pretty bad, as we saw. Let's go to the quarterly numbers. That way we can show you what this looks like. They've lost in the last 2 quarters. I mean, look at these quarterly numbers. The last 4 quarters, these are the losses. Guys, this is very bad. Number of shares outstanding over the last 5 years is the 4th or 5th pillar. Number of shares outstanding have increased, so another X here, 765 million to 809 million, another big X there, and I think it's actually gone even higher than that. So it looks like, yeah, they're all the way up to 930 million shares now. So it looks like they're financing their losses through shares. So what they're doing is they're going out to the market, issuing more shares, which is bad for you as an investor, and only using that money to pay for its losses, essentially, as we see so far. Balance sheet, current assets over current liabilities. Total current assets, $11 billion. Current liabilities, 10.5. Barely enough money to cover their current bills. And their debt has, now let's go annual to see their debt. I just want to look overall debt. Their overall debt's triple what it was last year, 2 years ago. So 2019 was 75 billion, 2018 was 22 billion. I'm pretty much a no on this company. Let's even see if they have free cash flow. Let's check this out. Free cash flow. Okay. In the last few years, this is bad. This is X's all around. I'm not touching this company. Like I said, gas companies tend to be difficult. Petroleum companies tend to be difficult to value because of their up and down profit margin, profit and revenue. So I just avoid it. It's very dependent on the commodity price of oil and gas, which is too hard to determine. I'm just going to go ahead and say a pass on this one. Even though it is up a ton today, it was up 9.9% today, I'm still going to pass. All right, Lumen Technology, L-U-M-N. Let's check out what they do. L-U-M-N, 450,000 route miles of fiber, including 35,000 miles of subsea fiber connecting Europe, Asia, and Latin America. One of the United States' largest telecommunication carriers serving global enterprises. Let's see here. Let's check it out. $11 billion company right here. Now, PE, 8.5. That is a check mark there. They have less than 20. Their profit margin is about 7.8%. Seems about right. So it's an X there, but very high gross profit, 57% gross profit, which is awesome. Huge dividend. Okay, so we got to look at this and understand the dividend. Their dividend's about 10%. That's a very high dividend. They're paying about 1.1 billion per year in dividends. We want to make sure they can actually support this dividend through free cash flow. Free cash flow is cash from operations less their capital expenditures, which is the money they invest back in their fixed assets to keep their business going. they have to have at least $1.1 billion to pay that number every year. So we want to make sure that's the case, but we'll get to that shortly. Revenue. Let's go to their annual revenue numbers. Over the last 5 years, 17.8, 17.5, 17.7, 23.4, 22.4. I think they had an acquisition here, so I don't know how I like this. It is up still, but I think it was done through an acquisition. Not a big fan of this. It's still a check mark. Income taxes. Oh boy. I mean, net income. Made 870 million, made 620, made 1.4, lost 1.7, lost 5.3. Okay, that's not good. The trailing 12 months, in the last 12 months, last 4 quarters, they have made 1.28 billion. So they had a couple big write-off. They had a big write-off somewhere over here. Let's see. Right here, special income charge. Wow. They had 5 quarters in a row of massive write-offs. That is bad. Maybe they're past it, who knows? But that wasn't good. All right, number of shares outstanding. Let's see here. Let's go to annual. Number of shares outstanding. Oh boy, 554 million shares outstanding. They doubled the number of shares outstanding. This is not even bad, it's horrible. To double their shares outstanding and to still lose that much money, maybe they used it for acquisitions, but it doesn't seem to be a good thing. I don't like that very much. All right, balance sheet. Total current assets less total current liabilities, 4.8 billion less 7.25, another X here. Oh boy. All right, let's see their free cash flow. We're not doing well here, guys. All right, guys, so to Lumen Technologies free cash flow, what we're gonna do is we're gonna add up all 5 years of operating cash flow and then subtract all 5 years of their capital expenditures. So the 5 years of free cash flow, let's add this all up together. 6.7, 7, 3.9, 4.6, 5.2 equals 27.4 billion. Now we're going to subtract out 2.9 minus 3 minus 3.1 minus 3.2 minus 3.6, 11.6 divided by 5, $2.3 billion in free cash flow. Now remember, they have a 10% dividend almost. So they're paying $1.1 billion per year in dividends. So they can afford that because they're getting 2.3. We want to multiply by 20, usually. In this situation, I would not multiply by 20 because they're not really doing the best. Their profits all over the place. But right now, they're making 2.3 billion a year and they're generating, and they're selling for $11 billion, they're selling for 4.8 times free cash flow. That is very interesting to me. So there's a lot of X's here, but this should be looked at further because they're selling for such a low multiple free cash flow. I wonder if there's a way here to make a lot of money off of buying them at a major discount. So let's look at look at this, by the way. For everybody who thinks that tech stocks, look at them. They were at $47 a share in 1999. Literally the last day of 1999. In 2007, they went a little bit above that, and they haven't been there since. And now they're down 80% in the last 20 years. This is an interesting company. There might be a value play here somewhere. You have to do a lot of digging and research on this one. I'm not saying buy it because it's just, when you're looking at these financial statements. But at the same point, this is very interesting. So their revenue jumped up a lot in 2017 to 18. So I'm going to look, right here. In 2017, they made a $7.2 billion acquisition. That's why you saw such a big jump in their 2018 revenue, because they made this big acquisition. Off their cash flow statement, it shows acquisitions of $7.3 billion. They don't do a lot of acquisitions, as you can tell, but they did that year. So their revenue is declining. Do some thorough analysis on this one. Figure out what people are saying about this. But it's selling for a very low multiple of free cash flow. And so, I don't know. This might be an interesting play. Let's see quarterly free cash flow. See what it looks like. I mean, they have the free cash flow there. Man. All right, this is interesting. All right, guys, thanks very much. If you like what you see, like the video, subscribe. I'm going to do this almost every single day where I recap big gainers and big losers of the S&P every single day. Thanks very much.